In this video, we're going to look at a large example of a statement of cash flows for a company. So in the PowerPoint slides for Chapter 13, we did different sections of the statement of cash flows. For this example, we're going to do a full statement for one company, and then we're also going to look at the difference in the direct method and the indirect method on the operating activities section. This example is also posted in my.wartburg if you want to download it and see all of the information on it. So we have a merchandiser. We've just finished 2015. It tells us all sales are credit sales. All credits to accounts receivable reflect cash receipts from customers. All purchases of inventory are on credit. All debits to accounts payable are payments for inventory. And then we have other expenses are paid in advance. We have prepaid expenses. Our income statement and balance sheet follows. We also have some various information about equipment sales, any gains or losses, any depreciation expenses we had, etc. So first we're going to look at the statement of cash flows using the direct method. So we have cash received from customers, and then cash paid out for our various expenses. So first we're going to look at the cash received from customers. For the cash received from customers, we need information from both the income statement and the balance sheet. So we need the amount of sales, and then we need to look at the difference in our receivables account. So we see that we had an increase in accounts receivable from 2014 to 2015. So we have our sales and our change in accounts receivable that's going to become cash received from customers. So that amount equals our $582,500 in sales minus any change that we had in accounts receivable. So we had $65,810 minus our $50,625. So we have cash received from customers of $567,315. Now we're going to look at our cash paid out from inventory. We start with our cost of goods sold. So we have $285,000 in cost of goods sold. Then we're going to see, did we have an increase or a decrease in inventory? We look at the balance sheet. Our inventory account increased. So we're going to add that increase. So the difference between the two accounts, or from the 2-year amounts. We look at the 2015 amount and 2015 amount minus the 2014 amount. We're going to add that increase. Then we're also going to look at accounts payable. So we look at accounts payable. We had a significant decrease in accounts payable from 2014 to 2015. That is cash we paid out to suppliers. So we're going to add the change in accounts receivable. That's a decrease in accounts receivable from 2014. We had $114,675 minus the $53,141. So we have cash paid for inventory, $370,390. Then we need to know what our cash paid for other expenses are. We have other expenses on our income statement. So we have $132,400 in other expenses. And then we have prepaid expenses on our balance sheet. We have a decrease in income in prepaid expenses. So we're going to subtract that change from 2014 to 2015. That gives us cash paid for other expenses of $131,775. The last thing that we're going to add to our operating sections is our cash paid for other expenses. So on our cash paid or for income taxes, so we're going to look at, we have an income tax expense of $24,250. We do not have an income tax payable on our balance sheet, so all of that was paid in cash. So $24,250. Our net cash provided by operating activities is our cash received from customers minus the sum of our cash paid out, or the amount of cash paid out to all of our other expenses. So we have cash provided by operating activities of $40,900. Then we're going to move on to our investing activities section. So this is where we're going to look at anything that happened to our long-term assets. So we can see that there is a change in our equipment account. And we need to look at any information that we have up here. So here we sold equipment costing $46,875 with accumulated depreciation of $30,125 for $11,625 cash. The only thing that we're concerned about for the statement of cash flows is the cash paid out. So we paid out $11,625 in cash. Oh, no, we received, sorry. We paid out $30,000. In note 3, it says that we purchased equipment, we paid $30,000 in cash, and we signed a long-term note payable. We want the cash payment part of it. We would put the other amount in a note to the statement of cash flows. So we would say we purchased equipment costing $96,375. We used a long-term note to pay for $66,375 of it and paid out cash. So that's a non-cash activity, part cash and part non-cash. So we have cash received minus cash paid out gives us net cash for investing activities of negative $18,375. Then we're going to move on to our financing activities section. In our financing activities section, this is long-term liabilities, short-term notes payable, and any equity section changes. So here we borrowed $4,000 cash by signing a short-term note payable. So cash borrowed, that's cash received. We received $4,000. We paid $50,125 to reduce our long-term note payable. So $50,125, cash out. Then we received cash from issuing stock. So it says that we issued 2,500 shares of common stock for $20 cash per share. If we take 2,500 times $20, we received cash of $50,000 for that stock sale. And we declared and paid cash dividends of $50,100. So now we're going to calculate what our net cash used in financing activities is. We make the cash payments out negative amounts. We can just sum that column. gives us our net cash made in financing activities. We need to know now our net increase or decrease in cash. So we would have the net cash from operating activities plus the net cash from investing activities plus the net cash in financing activities. That gives us a net decrease in cash of $23,700. Then we take the cash amount from 2014 of $73,500. And if we add these two amounts together, it should equal this cash balance of 2015. So that is a good way to check and see if you calculated your statement of cash flows correctly. If your ending cash balance on your statement of cash flows matches the cash balance from your balance sheet, then you know that you calculated everything correctly. Now let's look at the indirect method. So for the indirect method, the investing activities are exactly the same. Investing and financing, there's no changes to those activities. So the only changes that we have are the cash flows from operating activities. So remember, in the indirect, we start with the net income. So we take the net income from our income statement. We have $114,975. And then we make adjustments to net income. So the first adjustment that we make is any non-cash expenses. So in this case, we have depreciation expense, $20,750 in depreciation expense. The other information that we have is that we have a loss on disposal of equipment on the income statement. So we're going to add back losses and subtract gains. So we're going to add the loss, $55,125. Then we're going to look at our changes in our current assets and current liabilities. So we have a change in accounts receivable. So that increased from $50,625 to $65,810. So that is an increase of $15,185. We are going to subtract that increase in accounts receivable. We're going to look at the change in inventory. The amount in inventory increased. We will subtract our increase in inventory, $23,856. Our prepaid expenses decreased. We're going to add that decrease of $625. And then our last current asset or current liability is accounts payable. We had a decrease in accounts payable, so that is cash going out. We're going to subtract that decrease in accounts payable. We're going to sum all these lines together to get our net cash provided by operating activities. Regardless of what method you use, whether you use the direct method or the indirect method, your result in the net cash provided by operating activities should be exactly the same. So $40,900 and $40,900. That's another way that you can check yourself and see if you're doing the cash provided by operating activities section correctly. In between the direct method and the indirect method, you will get the exact same result regardless of what method you use.